everybody. Welcome to this week's episode of The Lumber Word. Live today on Thursday, a day late, but it was worth it on episode 141 because we've got Russ Taylor from Russ Taylor Global on, and he's going to help us break down a few things. Greg kept saying last week, let's get Russ's numbers on production, and we got him. But you guys want to run through the market real quick?
Sure.
All right.
Yeah, sure.
So interesting market since a week ago and 1 day since we did this. And another thing we'll talk about is the little announcement that came out, which I'm sure nobody read before they emailed and texted everybody at 8:00 at night the other night. But it's certainly something got the market going. So spruce, I looked at print, was up pretty good, was up decent for a midweek. But our outflow from our reloads was good. A bunch of the Eastern Canadian mills went off the market on some things, which is never a good thing. But I think most people are trying to get what they can across the border. We're back to what happened a few months ago, trying to get lumber across the border from Canada in the next few weeks, and then decide. Greg, how did that sound? Was that good enough, or can you clean it?
Yeah.
Can you clean up around the edges on the Eastern spruce?
Yeah, the market. I felt that prior to the announcement of a global 10% tariff on lumber into the U.S., that the market was in the process of trying to bottom out. We had seen some numbers bounce off the lows, and I'm talking about spruce specifically, and maybe I could say this for pine also, since Charles isn't here, so I'll be our yellow pine expert, and I can't do any worse than he's done lately. But I just needed to do that. So
that's perfect. That's perfect.
Right?
I mean, he's got to decide. He's got to decide if he's cattle or lumber, right? I mean,
yeah, exactly. It's like he's out cow tipping instead of like talking stick.
Yeah.
So I felt that the market was in the process of trying to make a turn, that it was going to probably take, I think I said, U bottom or L bottom. Now with the 10%, in the short term, it's given the opportunity for spruce mills to sell whatever floor stock they had they could load prior to the 14th. And then, to your point, Ash, once they add 10%, then they're not going to sell anything. So the real question is going to be over the next 2 or 3 weeks, what is production? What do they do with production? If there's no change, if there's no substantive curtailments over the next 2 or 3 weeks, we're going to do exactly what we did at the end of July, is the mills won't sell for 2 weeks, and then they'll have to offer the market right back down.
Yeah, and you saw the November futures. I mean, $90 to $100 premium to hemfer, and a pretty good premium to spruce. Same exact thing. Something similar to what we did this last run. And Matt, what did you see U.S. and on the Western Canadian side?
So the day of the next day of the announcement was probably the busiest day I've had in a month. I sold a bunch of studs. So that, like, what I noticed was studs immediately were the first thing that people cared about. And then, as the day went on, I started to sell a little bit more dimension lumber too. But interestingly enough, my actual truck business, as compared to what you said, Ash, was not near as good. So my in the field inventory business is tepid, and it's like a 4 or 5 on a scale of 1 to 10. And then the rail car business is more like a 7 or 8 out of 10 here up until today. Today it's quiet. So, I mean, are we just having a couple days of rally and then everybody just puts their head back down and forgets about it? I think that's kind of what the time of the year that we're in, right? I mean, my customers, when I talk to them, they tell me they need more sales, not more lumber. And so, the only way to fix that long range is less production and more demand. And we aren't getting more demand in October, November, December. We're going to get, we're getting a little better demand from the home centers. This is their seasonal peak right now. And the treaters like to buy, in the next few months, they like to lay in some winter inventory, and so there's some avenues there where you'll see a little bit better demand. Uh, but I don't think that the demand is really going to come from, the guys servicing the single family homes, the mass production of single family homes. I think there's more life in the multifamily right now and less life in the single family. So, here we are. We're going to react to news, and then it's over. That's kind of how I feel about. To me, it goes back to something that Ryan Miller said many, many times over the years.
Oh,
Like, feed
shout
the
out
ducks
to
when they're
Ryan
quacking.
Miller. Shout out to Ryan Miller.
Yeah, I still talk to Ryan on a regular basis. We're still buddies. But the wisdom of that is, like, when you do get a chance to pad your order files, if you're a mill like us, or if you're a trading company, the phones start ringing off the hook. Don't just go off the market, right? Don't sell one car, raise your price $20, and tell everybody you're off the market. That you're wasting an opportunity, really. Especially in the fall. This is like, every time you go visit a customer in their office, Greg or Ashley, do you ever see that big giant Random Lengths yearly average chart where it has the big graph of futures prices? And we're in the low of the year right now, right? This is the seasonal low on a 10-year scale.
7 out of 10 years. 7 out of 10 years.
So what do you
seasonal low in lumber is in the second or third week.
Yeah. So what do you do if you're objective and scientific, and if you're just looking at averages? Then you'd take any opportunity you can get to sell and pad your order files in October or November as a good thing. And there you go.
Yeah, no doubt.
I mean, just one follow up to that maybe is, we actually, all of the housing news statistics that have come out over the last few weeks have been mildly / surprisingly positive. Housing starts,
Right.
home sales, pending home sales. So that's if there's maybe a little silver lining on the demand side, that was there.
And
but
so
we're
what?
still,
Matt,
to your point, we're still in a supply push, not a demand pull market.
It feels that way. There is a lot of good economic news out there. I mean, if you listen to, like, I like to listen at lunchtime. I'll listen to Charles Payne because it's, that's when he's on, is when I'm going to lunch.
The money show.
Yeah.
Did you get his free,
I like
his
Charles
free book
Payne.
yet? Yeah. His free book?
No, I haven't got his. Yeah, no, I have not. But I do like listening to him at lunch, and he's coming up with all these. There's a lot of good economic news lately, but it's not translating to the street. There's a lot of economic pessimism in the people that I deal with and that I talk to. And also, just if you just look around Oregon, we're not exactly setting the world on fire out here as an economy. So, it's not hitting the way maybe it's hitting somewhere else. Maybe it's better in Missouri or Florida or Illinois. I don't know, but it's not hitting out here.
I think it's lots of uncertainty that's just causing consumers to stall, right? Waiting to see what's going to happen. The government shutdown now. Let's see what happens, right? It always seems to be another episode every week, right? That changes the dial.
Yeah.
Well, so yeah,
Ashley came into my office this morning and he said, "Do you realize how much government spending is up from
2019
years?
58%.
So federal government, like post-COVID, if you take the extended, like the normal, like kind of gradual increase, we're $2 trillion above that trend line. So to get back to the pre-2019 trend line, we would have to cut $2 trillion in spending. All that COVID area temporary stuff that we put in place that has become.
That seems like a big number.
Isn't it a lot? That seems like a lot, doesn't it?
Haven't you noticed it?
What do you think, Russ? Would $2 trillion help the Canadian economy?
Sure, we'll take half of it. How's that?
Well, so all right, a couple weeks ago or a week ago, Greg was saying, wouldn't it be, and this is perfect to fold into this, Russ. So what we're saying here is it hasn't hit what if it all of a sudden does hit the street at the same time all these mills decide to curtail, right? I mean, are we setting up for mills starting to curtail just as the plane is tipping its nose up and starting to have a little bit better outtake on lumber, construction, repair and remodel? I mean, do we see that coming down the road, Russ? And what's your data telling us that like you sent to Greg the other day on production?
Yeah, well, I mean, just starting about the demand side, I'm not that optimistic about the rest of the year. I think housing starts are going to ease off. Mortgage rates still aren't coming down, so I'm not sure we're going to see any real increases. I could be wrong on that one. I'm not the economist, but it just doesn't feel right. Repair and remodeling, it's going to fade in the fourth quarter, I think. So, and again, higher interest rates are limiting bigger projects. So, demand side sounds like with all the government shutdowns, uncertainty, and everything else, maybe it's not going to have a happy outcome for the rest of the year. And then on the whole supply side, you've got. I think we need a lot of curtailments out of Canada and even Europe too, reducing shipments to the U.S. because they're offside so much. My rough back of the envelope numbers that I play with, I have with the 35% duties and the 10% tariffs. I've got Canadian or BC mills, BC interior mills, SPF mills, negative EBITDA of about $120 a thousand at current prices. So that can't last long. And then Eastern Canadian mills, maybe $80 offside. Quebec and Ontario, that's an average. So higher, worse in Quebec, better in Ontario. And even the European mills, I'm thinking are off $75 right now. The tariffs alone, 10% tariff, 15% tariff on European lumber is $70 a thousand. So they're off that. They were kind of break even-ish at that point before that. So we've got the supplies got to come off, and I think U.S. production is gently ramping up. I mean, year to date, U.S. production is up about 0.5%. That's the high. That's the first increase in about 3 years. And Canadian production is off. What did I say? About 6%. Yeah, through June.
Yeah.
And exports through August are off 10% from Canada, and BC production is also off 10% through June. So, and that's before the tariffs even kicked in, right? Or and the higher duties. So
that's before the ADD and the CDD and the tariffs all jumped in here in the last 30 days.
The 20% increase in the duties. Yeah. So, and quite honestly, you don't have to put tariffs on BC or duties. Just let the government of BC keep working away, and they're going to keep reducing their production on their own. All their policies keep making it worse and worse, and timber supplies is not available. There's no.
You've got Carney pledging support for the timber industry at the same time that the BC government, as you say, can you expand on that? And it sounds like the two parts of the government aren't talking to each other.
Well, the BC government story is they've launched all these, I would call it conservationist type policies. Let's preserve the old growth. Let's set it. Well, caribou is a federal thing. We're setting aside areas for caribou. We're going to increase the number of parks. We want to have 30% parks by 2030. We're at 19% now, according to the numbers. More parks. We want to give more timber to First Nations. That means taking it away from the primaries and give it to First Nations, and they'll study it for long periods of time. We have this program called landscape planning, getting communities involved, First Nations involved, and discussing it. Well, one of the first programs that was set out was 3 years ago. They still haven't finalized that. And so you can't do anything. You can't issue any new cutting permits until you finalize all this stuff. So it's going to take 10 years for all these landscape plans to get done. And that's going to reduce logs available to the industry. And on it goes.
That just slows. It's just red tape, and it just slows down the process. Yeah. So you can't cut in those areas until it's been
and mills are either.
But I think equality of outcome is really important. we're going to experiment with that in New York City. It looks like coming up, quality of outcome. Yeah.
Well, so
Well,
back.
no, what Russ is talking about is the process is the punishment, right? So, you know,
Yeah.
in Oregon, Washington, California, this happened 30 years ago where the Sierra Club and other environmental groups on the West Coast would just sue. You know, there'd be a fire. This still happens in Oregon. This happened 4 years ago. We had a huge fire. You can drive 30 minutes from my house and you're in the middle of the wasteland that is the fire. And guess
Have
what?
we seen
They
is
barely
the forest renewing itself yet, Matt? I mean,
no.
one of the most beautiful things
it's
is
bad.
watching how nature renews itself. I mean, you know, that's my whole thing is like, hey, if you don't cut the trees down, eventually they're going to burn down because that's the only way the forest renews itself.
Well, I'll come back to that, but the point is that the salvage logging just on burned timber, which is, you know, makes economic sense to go in there and rescue those logs in the first year to 2 years while they still have an economic value. You can replant at the same time that you remove viable timber that's destroyed, right? But if you let it sit for more than 2 years, then the bugs get into it, it becomes unsawable, it's worthless now. So the process is the punishment. They just tie up all these timber sales in lawsuits over and over and over. They just keep appealing until it's the 2 years has gone by, and then okay, everybody just drops their bid to cut that timber and moves on, and then it takes 40 to 50 years for that to regenerate. So when Mount St. Helens blew up, coming back to what you said, Greg, when Mount St. Helens blew up, it destroyed like half of the mountain and all the surrounding areas with ash, right? It just turned it. You know, there was parts of, you'd go up there 30 years ago, you'd go up there and you drive by a mile of moonscape where you would swear to God, nothing would ever grow again. It was like 2 feet of solid ash and nothing alive whatsoever. It was just gray. And then you'd drive further and there'd be a mile or two of beautiful green lush forest that didn't get affected by the lava flow or the pyroclastic clouds. And it was still beautiful, you know, old growth rainforest. And then now I went back up there not long ago to go camping, and even those places that were the moonscape are now growing trees again. So it's taken 45 years for even the most harsh environment destruction up there on Mount St. Helens to start growing. Now, they're just starting to grow trees. So those trees are like 10, 15 feet tall. But in 30 years, so it's going to be a 75-year process. 75 years is our average lifetime if you're a man in the United States, right? That's how long it takes for those trees to get burned, decompose, and then come back on their own without replanting. Now, if you'd have just cut all those trees down on Mount Hood that burned 5 years ago, if you'd just cut all those trees down, logged the hell out of it, replanted, your turnaround would be 35 years. You would have saved 40 years of staring at dead trees.
So
I don't understand the good policy there. Where is the good policy?
I mean, I look at like, I'm thinking about if I'm a listener and I'm saying, hey, okay, so what am I going to get out of your conversation here today, guys? And what I heard was that the current prices are unsustainable for for Canadian and Europeans in the U.S. market. If Charles was here, we could talk about the pine prices, which I think are below break even also, aren't they, Russ?
Yes, correct.
So, I mean, the most amazing thing to me is when I think about all that is like how long can prices stay at the current level? And, somebody said, Greg, what are the prices going to be in the first quarter? And I've been unabashed in saying almost all prices will be $100, $1,000 higher by the first quarter, and people go, "What are you like? What are you on?" And I have to take that off show. I'd happy to share my script list with you, but yeah,
well, Greg, that's a great question.
Matt's point, Matt's saying, "Hey, we know that we're going to the seasonal low of lumber." I don't know that. I mean, but the wild card on that is. And I've had multiple mills in the last few days tell me, yeah, but it's really expensive to shut our mills down. And I said, for a whole host of factors, right, Matt? Oh, what are we going to do with the labor? We're not going to be able to get it back, et cetera, et cetera. And I think it is a really harsh decision for producers to do it and how it affects communities, et cetera, et cetera. But then I look at Russ's numbers and I go, let's just do the math. I mean, and if you don't cut production as we move forward, to your point, Matt, seasonal lower consumption over the next 90 to 120 days, your prices are going to be even worse.
So if you go to the tape,
go ahead, Russ.
Sorry, go ahead.
Well, actually, Russ,
No,
if
you
you have a history of some of this, have we ever gone through a time period with prices at this, or with the production costs percentage wise this low, and how long did it last for before there was significant production taken off?
Yeah, usually the valleys are V-shaped, not so much U-shaped like they are now. And I mean, when you start thinking about like the Canada, or say BC, I guess, but Canada as a whole, if they're off the duties and tariffs at $110 of cost, and then since mid-August prices dropped about $120 a thousand in total. So you're offside about $230 a thousand in 6 weeks, and you're not thinking about curtailing, and you want to take 3-digit losses on your lumber. At some point, you have to curtail some of your production and try to stagger it out and hang on to your employees. I agree, there's a problem with keeping employees and contractors and customers, but the way the industry is set up right now, you're just bleeding so much cash at a level I've never seen before. Usually, you might get a short drop for two or 3 weeks, but we're into week number 6, or is it week number 7 now of the lower prices and the duties, and then now we're into add on 10% more on top of that with the tariffs. So it can't last forever. These mills have to at some point take curtailments. I agree. You got to take curtailments to get the prices up, and I think they will go up $100 a thousand, and I think it will be in first quarter. And the futures market kind of implies that too, if you believe that. They're saying it'll be up $100 in January. So I don't always believe the futures market, but that's the way it has to go.
But even at 630 equivalent Chicago, which is January, that's below break even for most Canadian mills, right?
No.
Are we there?
Well, good point. I've got on a 2x4 basis, not sort of a cost basis, but a 2x4 basis. I get BC mills at about 550 currently is where they need to be. So
550 Chicago or 550 mill?
FOB mill. So
mill.
What's that?
Yeah.
660.
660.
The most interesting thing is when you look at all of the products, 2x4s are the highest value product in all of the producing regions. So whatever your mill cutting profile, Matt, right? Is that the way that I think Charles always likes to use that?
Yeah, it's that, and it's your logs. So the logs that you're getting, right? So the Dunkley mill can process a bunch of 2x12 because they have giant logs that they have access to, whereas our mill at Babine, we don't process that kind of a log. It's not available to us, and our mill's not set up that way.
Why can't you cut a 2x12 log in a 2x4s?
Knot size. You'll get a whole bunch of number 3 in economy just on knot size.
Okay, that helps.
This is why, I had a mill in Oregon ask me yesterday, they're going to run some 2x4 and 2x6 for me in November. And they said, well, knot size is a problem for us. And I said, well, they just run as heavy 2x6 16 as you possibly can, because that'll be their best recovery, and that'll be my best sales strategy in terms of getting the best value for the lumber and the log. Now, what I initially told them was just run it all 2x4 heavy 16. And they said, well, it's knot size we're going to get way too much utility number 3. I'm like, okay. So really it depends on the log. It depends on the type of sawmill. But those are the 2 factors that determine what the mill outputs. Also values, right? So like 2x12 long, we have long lengths. So if we can sell 2x8, 2x10, 2x12, 22s and 24s for a high value, then we're always going to run some 2x8, 2x10, 2x12 out of our bigger logs. I mean, every mill has options. At least mills that can run through the whole 2x4 through 2x12.
Yeah. So good point. So now circling back to we're 6 weeks into this. At what point is it after earnings, after they close their books for the year, for their fiscal year end? Do they decide to do something? Greg, you said and everybody said it's hard to shut these down because there's a difference between cost of production and shutdown costs. I mean, will they continue to run at these numbers, or are we going to see just scattered curtailments?
I think it's a lot's going to depend. If you think about the current prices, we're up marginally from low trade prices, but we're not really there's really not been a substantive change in prices right here. Right. And I think if those prices hold for another 2 to 3 weeks, that once you get into late October, early November, the decisions will come. And I think even if prices move up nominally from here, and I'm saying nominally $5, $10, $20, pick a number, I don't think that's going to be a difference maker for the decision making over the next 30 days. Just based on listening to Russ's numbers and in the reality that seasonally demand falls between now and January.
Yeah, but I do think I think that you alluded to something earlier that's going to help everybody. It at least helps clear your mind a little bit. Thinking about the future of lumber prices, if we maintain these $80, $100, $120 premiums in the November and January and March contracts, eventually people are going to just buy more lumber and trade that against those numbers as forward sells and risk management tools. And the price, futures tends to lead cash in our business, right? So when markets tip over and futures go to a discount, guess what? The mills eventually start dropping their prices. We saw that at the end of COVID. When futures was first to get down below cash, it tipped over. Now we're seeing the opposite. And all it's doing is telling you, it's affirming what Greg's idea was, is that, okay, then it's telling us, hey, prices are probably going to naturally rise somewhere close to $100. Now, my theory is a little different. I think most of the rise will come from cash, but some of the rise is some of the price depreciation will come out of those big premiums. I think you'll see, $640 futures turn into $600 futures and cash move up towards 600, and so there'll be kind of a convergence point in between. But I do think lower production and better, if you're a speculator, there's never been a better time to be alive in the lumber business than right now, right? I can't make that point strong enough. If you want to go out and basis trade and you've never done it before, today is the greatest day of your life, right? You've never been given a better opportunity to make $80 a thousand. We used to joke about $30, $35, $40 a thousand being home runs. You can make 80 or 100 today.
Yeah.
Do it. Don't stop. Run. Go open an account. I'll help you.
This is Matt jumping up on his desk and going buy. I love it.
It's not so much that, it's just that it's obvious, right? And so
yeah,
when our business gives you obvious arrows, you should just take them. It doesn't happen all the time.
The only challenge that we have, Matt, is that the segment of the industry that is in a position and is to do that is a very, very small sliver, and it ultimately doesn't really impact the prices.
Well, Greg, you and I are going to retire someday, and these younger guys are going to
7 years.
One day, son, this war is going to be over.
Yeah, and these younger guys are going to have to step up and take over the mantle of the Greg Rileys and the basis traders of the world, and do it themselves. Because look, it's opportunity knocking, and I look, mills should be paying attention to the back months, and even like if I was a sawmill in Canada and I could sell November at 580 or whatever it got up to the other day, that's as good a number as you're going to get.
Can I just jump in on one thing?
If I look at Russ's number, and if break even is 550 mil, that's 660 Chicago, and so like, what am I really doing for myself? Locking in an $80, $1,000 loss. I mean, am I really helping myself? I mean, that's my challenge. Ash, I need to apologize to all of our listeners because, I've been very vocal. And I think I owe Dustin Jobert a seafood tower, because starting in Montreal, in April I was 232 poo poo, and now the poo's all on me because it happened. I mean, and I apologize. It just didn't make any sense to me, and but that doesn't mean anything in this world.
Well,
I apologize.
So
I was wrong.
One thing to follow up on, Matt, what you and Greg were saying is, I don't know if my video still working okay for you guys?
Yeah.
It's killed the radio, but
Matt, you said, why don't people? So Greg and I just went through we won't say too much about delivery process on the CME, and
I know a little bit about that.
We're still in the middle of that, Ashley. So I caution you that, like, maybe until it's all like,
no worries, but
not share.
But let's just say general over every expiration when it comes down to EFPing or talking about deliveries, I've come to a conclusion last night actually that a lot of people and people are going to hate this when I say it, but I feel it's true. There's a lot of people that even currently trade futures for their companies that have no idea what they're doing. They don't even know how to EFP. They don't know how to deliver, how to take delivery, and generally aren't that smart on futures, but talk about it all the time. And I came to that conclusion when I started talking to some of the people who told me they knew how to EFP, and then you ask them about it and their eyes glaze over. And it's crazy. I don't think there's a lot of people out there all through the chain that actually know how to trade the futures market instead of being speculatively long or short. As far as trading basis and actually running it through, and which is unfortunate. And I think that's a good thing, because if everybody was doing all that stuff, it wouldn't provide the opportunities that it does. So
right.
We don't want to shoot the golden goose.
I agree.
I've got a question for Russ. Russ, what are the mills and the people that you deal with on the Canadian side? Where's the hope from their perspective? I mean, what is the long-term outlook? Where is the future? What are you hearing? Give us some inside baseball of where this goes eventually.
Yeah, I haven't talked to a lot of them because a lot of them don't really want to talk when things are really bad, right? Because what can they say? But on the other hand, when I do talk to some of the people I know, we talk about this is just a cycle. We've been through cycles before. The cycle from 2007 to 2009 and into 2010 was really ugly, right? And we got through it. How much did production drop from North American production? Peaked in 2007 or 8 at what? 70 something
72
billion board feet. Yeah, something like 2006.
It fell how much over the next 4 or 5 years?
I think it was 40% in total.
Right. So you think about that. Production fell 40% over that 4 or 5 year time period.
Yeah. Yeah. And back then we had no demand. Housing starts were overproduced. Right now we're short of housing. So, the upside is waiting for us. There's demand for housing. There's demand for repair and remodeling. Interest rates are optical.
I have one amendment to that statement. There is demand for housing. There's demand for cheap housing and affordable housing. All of us are established. We've had their careers and income for 30 plus years, and we've bought homes. But it's my kids that are the ones that, they're in their 20s now. They're going to be graduating college soon, getting married. Those things are going to happen. They're going to want to do the same things that we did 30, 40 years ago. A starter home piece of junk in Portland costs $450, and you're going to have to put $100,000 into it, and then you got to finance it at 6.5. So, I mean, you're talking like $3,000 to $4,000 a month. I mean, they can just rent an apartment for $1,500 a month. Rents are dropping. So, how do we get like the new McDonald's of home builders? Like, somebody's gonna have to come in and just be like, here's a Big Mac and a small fry, and it's gonna cost you $275. It's gonna cost you $325.
The challenge with that, Matt, is this, the biggest input price for housing is the cost of land.
Mhm.
And so, that's where all the cost is. I mean, we've got bazillions of acres away from metro areas where you can buy acreage for, $1,000, $2,000 an acre and build homes, but nobody wants to live there. They want to live in Portland.
Why? Why would you not?
They want to live in California. They want to live in in Austin.
I understand that, but I live outside of Portland. It only takes me 20 to 25 minutes to get into Portland. You guys don't live in downtown Chicago. You live 20, 30 minutes away. I mean, you can live outside of the city and still take advantage of the city.
Lots on the North Shore of Chicago, like quarter acre lots. What are they, Ash? Like $800,000, $900,000, $1 million?
Yeah.
Yeah.
That's maybe not the best city. But like, you would think that COVID would have taught us that we can be mobile, right? I mean, I work outside the office. I work when I'm traveling on business. I bring my laptop with me. I mean, I work off my cell phone at lunchtime, and
I'm working.
I
I'm
know
working right now.
Yeah, I know that businesses want people to be in the office and return to the office and return to normalcy and all that stuff. But look, the solution in the future for young people or people that don't have as much entry money in the game to start buying a house, that they want a house, but they just don't have $100,000 laying around, would be cheaper first cost entry point, right? So cheaper monthly payments. We got to figure out a way to tap into that demand that's just sitting there. There's got to be millions of people that want to buy a house that can't afford it. And we can't figure this out.
We've seen housing prices, right now, new home prices are lower than existing home prices, and both price points on new and existing homes in the US are now falling or rising at a nominal price. It was an interesting article today in the Wall Street Journal about, and my pet peeve, Ash, can I take this opportunity to talk about student loans?
Sure.
And I did see where the Trump administration, and part of their outreach to universities, wants them to freeze their tuitions. I'd actually be asking them to roll them back 5% a year. To cut a deal, but about the whole whatever gen it is now, that is saddled with student loan debt. And I mean, we know the previous administration, tried to just wipe it away like it didn't happen, which was, which was illegal and didn't happen. But really, the conversation in our country should be, let's stop funneling debt to young people that just gets circular back to the universities. I mean,
why don't they take a loss? Why don't the universities have their skin in the game? And that's the part I don't understand. Why are they not taking any risk? And they're making all this money, but they're not taking any risk.
No, they're all nonprofits. Yeah, Matt, they don't make any.
Okay. I'm sure Russ is enthralled with this. So Russ,
I know
the Eastern
Russ
Mills.
is like, I signed up. I said yes. Why did I say yes?
I want to talk about college in America. Come on, you guys. Hey, Russ.
Let's talk about global timber demand. What's going on around the rest of the world? Are there bright spots? Are there negative areas? Like what are we seeing out there? Has all this tariff stuff? How's that discombobulated everything?
Well, the U.S. market looks really good compared to the rest of the world. Yeah. Global lumber consumption, softwood lumber consumption, it peaked back in 2016. It's been declining almost ever since, gently. So we're quite a ways off the peak in 2016. That's when a lot of things started slowing down, and then more recently, China's cratered and so forth. And so it's the big picture is not so great. China is a mess right now. The construction market, 5 years of decline. They're buying furniture grade lumber and some industrial lumber that actually is more stable. But the big chunk was always construction lumber, for concrete forming and that sort of thing. That's pretty much gone away. Japan's housing market is slowly declining. Demographics are getting worse, of course. So their overall demand is easing. Plus, their domestic production is increasing. In fact, they're now certified to make dimension lumber for the U.S. market, and over and above their sugi for fencing and so forth. So
Right.
there's a new supplier. They're the third biggest supplier of logs to China, or is it lumber? I can't remember. But they're
what's up with Russian timber? I mean, like obviously sanctioned, and I mean, are they is it just all going to China?
Yeah, it has been at very low prices. So they're now getting into negative margins. They can't really grow their business. And if they go to knock on the doors of a new country, they start getting low offers as well, because they're the cheap supplier. So they're getting now negative margins, and some companies in a bit of trouble and starting to do some curtailment. So they're in the markets they go after, with China's 70%. I think of what they sell or they produce and export. The balance of it's here and there, and they're not really gaining a lot of traction. So, and that's the problem that BC has too. I mean, if you want to diversify markets, that's part of the government. Back to Carney, we didn't finish that discussion, but the 1.2 billion that was announced, 750 million was for loan guarantees. This is with the idea that tariffs and duties are going to cause financial strain for the companies. So that's kind of what the bulk of that was. And the balance was more geared to kind of new product, new market development. And when I go, well, the rest of the world doesn't buy 2x4s. The rest of the world buys metric thicknesses, widths, and lengths. And they don't want construction grade. They want furniture grade. They want industrial grade. And the construction grade is kind of what's left over in the middle. All we do is make construction grade with a bit of a high grade going to Japan. So we don't have a lot of markets for 2x4s. And so we have to sort of rethink what we're doing. If we really want to diversify into markets, we have to diversify into products. We have to look at kind of doing some pre-sorting of logs and getting into metric size lumber, so we can be competitive against, say, the Europeans in some of these export markets. And that's going to take time. That's not an overnight thing. And if
why do the Eastern mills? Why do the Eastern mills have a cost advantage versus the West when you were talking about their break even?
Well, it's the log cost. I mean, BC's log cost is the average company is forest licenses. Perhaps you get 50% of your supply through forest licenses. Another 20% is available through BC Timber, but they're underperforming. Then the balance is some private land. And so what happens is and the government can't deliver on the 50% of what you're supposed to be getting. So you start paying huge premiums on the margin for that last bit of timber, driving your average log cost up. Whereas in Quebec and Ontario, they rely mainly on forest licenses, and it's just a lower cost overall. So that's the big difference. And mills are running less shifts as well, increasing the sawmill costs. So it's a combination.
Your unit cost is higher. You talked about the changing of the industry. They would have to basically abandon the old mass production type sawmills that are geared to run in 2x4, and go to a cut to length sawmills that are more like European sawmills. I mean, how much money would that cost, Russ? That seems expensive.
Yeah, yeah. What European mills, what mills in South America, mills in New Zealand, Australia. I mean, the rest of the world, they tend to have log merchandisers. So they these log merchandisers, they put it through, the logs go through a merchandiser first. They're sorted into, diameter, by length, and by grade, and then they batch them through, tied to the end market, and they can get faster throughput than the way mills are produced in North America, because the logs are almost butt to butt, and they get very little fall down too. So it's a value added lumber machines is what they are. Whereas we have dimension lumber mills, and we can sell the low grade very easily. But you try and sell a metric size or kind of metric size and get a lot of low grade, there's not a ready market for that available unless you dump it in China at cheap prices. So you got to start sorting your logs in the woods, or sorting your logs in the mill, and or putting in a log merchandiser. They're I don't know what they are, 10, 20.
So you would never see like 20% number 3 in economy coming out of a mill like that, because the logs that they're buying are already high grade logs, and they're not going to, they might get 5%.
Yeah, well, they sort them, so they know that because they're sorted by grade, they get very little low grade. 5% is typically what I hear, and that's the advantage of pre-sorting your logs. So if you don't sort your logs, you get too much low grade and fall down, and then trying to find a market for that becomes more difficult than trying to sell your primary product in a new metric size. So that's the challenge, and that actually BC mills are cutting more metric size lumber, and they're figuring it out, but it's in small amounts and at certain targeted markets that they're going after right now.
Hey Russ, before we turn on the video, you said you'd read the article about 232, or the release, the White House release. What did you figure out on that?
Well, the 232, it's mainly about softwood lumber, and so that's the 10% for everybody. But if you had a deal already in place, EU, they get 15%, Japan 15%, UK 10%. They're not an exporter. Brazil has no deal; they're at 50%. But every other country is basically 10%. But that 10% doesn't mean it's not going to go up, right? That's why, with President Trump, he wants countries to lock in some deals, so then he doesn't have to deal with this all the time. So I think that's just a starting point, in my opinion. And then also they talked about upholstered furniture. Okay, that's 25% tariff going up to 30% in January. Kitchen cabinets and vanities, 25% going up to 50% on January the 1st. The EU, they have a deal, so it's only 15%. So that's an advantage for them. But what was not talked about that I've seen in the media is it's also softwood logs and some hardwood logs are included. At 10%. So that's actually, when I thought about it, I went, well, that's not good for the sawmills in the US. That's less logs available to the sawmills, but that's good news for the timberland owners and the REITs.
Well, unpack that, Russ. What do you, I don't understand what that even means.
So the tariff on logs. So if there's a tariff on logs going across from Canada to the US, that means the beneficiaries are going to be the timberland owners. That means there's less supply. If you can't afford the 10%, less logs go to the US. So then you have to source more logs from the US timberland owner. He can start to raise his price, and that means the sawmills are going to pay a bit of a higher price for logs. So I thought that was a negative for the sawmills, but a positive for the timberland owners and the REITs. That sort of thing. And then I guess there was no mention of OSB, plywood, MDF, particle board, pulp, paper, wood chips, nothing. But that's part of the directive. So is that yet to come?
Or is that just figured into there and they forgot to put it into the document?
No, they have they have HS codes, and I had to go through a lot of the HS codes to kind of track them. And there's no OSB, no plywood, no MDF, no particle board. So that's maybe yet to come.
I mean, one of the things, I guess it's something like, I don't know, 70 or 80% of trade between the US and Canada is been exempt because it's part of USMCA, right?
About 90%.
90%. Okay, right. And now once you layer 232, then that exemption no longer applies.
Yeah, well, that means now that's that's now it's got a tariff on it, so that reduces the total from 90% to less, whatever that is, right? So, and then aluminum and steel, they have tariffs on them too.
Right, and aluminum, steel, and crude oil have separate on them. Yeah.
I have a question for Greg.
Bye.
What is your opinion on what is the end game of this after 4 years of the Trump administration? So fast forward 3 more years, where does all this tariff stuff? What's the end game? Because I don't know.
So the end game is driven by Trump's core fundamental beliefs. One, that the global world order post World War II that the U.S. put in place was no longer viable, and that the U.S. had been taken advantage of by the rest of the world. That's number one. And then number two, and this bore true during COVID, was that the whole idea of globalization is really great, except for the fact that there's a whole bunch of industries which it makes a lot more sense for a country to be self-sufficient, or at least, or at least majority self-sufficient in from a global security standpoint. That's my analysis of the driving forces behind it. What do I think will end up? I think somewhere, between an average tariff, prior to this, the U.S. collected like 2 or 3% in tariffs when it averaged all out. I think we'll end up being somewhere between 10 and 15% when it's all said and done. Every country out there has the opportunity to give themselves a preferential position with the United States. All they have to do is want to do that. And, the ones that have done that are, they're moving on, and a 10 to 15% average tariff is not a game changer for anybody in the big picture.
So right now, if I heard Russ right, European lumber that we bring into our ports, like in the Cape, that's going to have 10% next
15%.
month, 15%. And that starts when for people that buy euro, when does that?
I think that's October 14th. I think
Okay.
That's the, that's for the 10%. I'm not sure about I'm not sure, but it might be later than that actually, Ash, on the European lumber, because that's tied to the broader deal. I think it is a bit later.
So Greg, all the euro
lumber was exempt from the settlement with the EU on 15%. That was exempt under prior.
Correct.
So I think it's just 10%, Ash, but that, I'm not, as I've already admitted earlier on the show, I can be wrong.
Yeah, no, the order does say 15% for Europe.
So, the reason I'm asking, Greg, is I think we should sell what we have in euro today, and then if we can't get it shipped before the 14th, we should raise it 15%.
This is back to Matt's question before. I had a couple of people early the morning after the announcement go, so what are you guys going to do? I'm going, we're going to do the same thing that we always do. We're going to sell lumber every day. And, if we sell, then we're going to move our price higher. Our goal is to always be, sell based on replacement costs as a distributor. We lost tons of money in the month of September selling higher priced inventory at market prices. And, I got the call from Montreal to prove it.
I think September was bad for everybody, dude. I don't think there was a lot of heroes in September. There might have been a few, but they were the outliers.
Russ, what do you? Go ahead, Russ. No, go ahead.
I just as out of interest, I was reading the fact sheet that came out around the 232 investigation, and there's from a Canadian perspective, we saw a little bit of mistruth or untruth or stretched truth, but
shocking.
That's just me, and shocking as well. But they talk about an over reliance on foreign lumber, but U.S. production is at a 10-year high in terms of how much in terms of U.S. Demand, how much is U.S. production? It's at a 10-year high. It's falling away, and it's happening naturally. But and if there was an over reliance on foreign lumber, why doesn't President Trump come to Canada and say, we want a minimum volume of lumber from Canada? Can you do that? And we probably go, sure. But anyways, that's not happening. But the
no quotas, please. No quotas.
Yeah, exactly. Well, anyways. I agree. That messes up markets, and then the U.S. has the practical capacity to produce 95% of its own lumber. That's just a calculation. That's all it is.
Right.
And
it's a made up number.
It's running at 100% operating rate, which the highest they've been in is 85. So.
You've got some bureaucrats, pumping some numbers around.
I've already protested that in one of my notes, and they talk about foreign subsidies and predatory trade practices. All governments subsidize their industry somewhat. It's just that if you're not a U.S. mill or U.S. company, then it's the foreign companies that get looked at, and they get their the deal set. And the other thing too is. They talk about 30 billion board feet produced in the U.S. since 2016. Well, if that was the case, you wouldn't need a stick of Canadian lumber or European lumber if that was the case. But they don't quite state exactly what that means, and they talk about excess capacity in Canada, but we don't have the logs to go with it. And the final thing is, I've just learned this, and I'm not an expert, but the anti-dumping duty calculations. If you ever want to learn about that, and I've tried. But they use constructed values versus normal values, and that increases the duty. They use constructed values, and that means it's a way of increasing the duty, anti-dumping duty. And then they also use a methodology that zeroes out the higher valued products that don't have shouldn't get any duties, and they only use the products that have duties.
What you're saying is there's a possibility they could back into a number that they want using different math.
That's what I'm learning more and more, that these duties are just a calculation and they're biased. So
do you see a way out? Do you see a way out? Because the duties are going to go up some more, I think, is what Greg says, next year. So it harms us. It harms our partners, right? We all buy Canadian. I mean, Greg works for a Canadian owned company, and he has Canadian production to sell. We have Canadian production.
Yeah. I think as part of this USMCA agreement, and somehow you got to, figure out, let's get back to a square one. And lumber is going to be a tricky one, I think, all the way through this. But unless you have some certainty, it's difficult for anybody to play in the game. And at the rate it's going, I mean, I think the current administration wants to make the U.S. self-sufficient in lumber. So the rate they're going, they're going to be moving with higher production, more national forests, and so forth, and creating impairments for exports coming in to the market. So that's the path they're on.
I wonder how they're going to turn the national forests into lumber producing regions again. It's been 40 plus years since that happened. But yeah, the funny thing to me, Russ, is the whole Section 232 is a national security thing, right? So when did lumber become a national security?
Well, that's the whole thing.
I'm going to go home and tell my wife, hey, I work in the national security industry, sweetheart.
But the whole thing could get thrown out. The whole thing could get thrown out in the Supreme Court too.
Yeah, which the odds are going to favor that.
Yeah, that's my feeling. That's what happens.
Right. And so that's the other thing is, so do people roll the dice and say we're going to get the 10% back anyhow, or do they say, well, you know what, we're not going to roll the dice on that because there's a good enough chance that even if they lose, that they go, well, we're not going to give you the money back anyhow. They just did that before.
Russ, you said something interesting too, and if all of a sudden the U.S. if we only produce lumber that we consumed in the U.S. and we only produced it in the U.S., I'm still a big believer in Econ 101. At some point, everything returns to its cost of production. The prices would go at or below the cost of production the same way that they currently do now. And over time. And then what would happen is you wouldn't just have a coalition. You'd have different regions fighting against each other in the United States for who's subsidizing who because of what state and what in all that. It's really a shame what that group has done as far as do some things. And as small as lumber is, I'm so surprised that Trump administration is on it. Like I said, there must be 2 or 3 people that are very wealthy that probably pay for a lot of these lawsuits, whispering in somebody's ear and donating a lot of money to some politics. I don't know that for a fact, but that's just a pure guess on my point.
Where there's smoke, there's fire. Hey
you're
guys,
probably
awesome.
right.
Russ, always great to have you, man. I appreciate your input and good stuff, guys. We'll see you next week.
Guys.